Hello everyone, welcome to another video review of gold price chart technical analysis. Before we begin, I'd like to highlight that no part of this video is to be taken as investment or trading advice. This video is created solely for the purpose of education and sharing only. Now we start our analysis by looking at the daily gold price chart. This is the bar where we left off from last week's analysis. At the time, we had said that gold price is likely to trade mostly sideways as the traders await the decision from the Fed with regards to tapering of the bond buying program. Gold price actually headed slightly lower, and once the Fed's decision was confirmed and there was going to be no tapering this time around, gold price really shot up. Now this move up looks like a strong move, so let's take a look at the technical analysis to decide where gold price is headed to in the coming weeks. First of all, this move up, although it was quite strong, it got stopped by this trend line. This is the bottom trend line of this trend channel, which we had been following for the past few weeks. This is actually a bear flag, and it's a ABC correction, a zigzag correction, which we said was just a rebound before price continues down. And so this price got stopped by this trend line, and it was then followed by a day of indecision, okay, with this doji here, and finally it was followed by a decision to bring the price of gold down. So this sets the ball rolling for further price breakdown of gold. And this actually starts the notion of a much more bearish outlook for gold in the coming weeks. Let's take a look at the counts that we have. Earlier on, we had thought that this 1-2-1-2 formation is part of a leading diagonal. Leading diagonals appears at places where you have a trend reversal. So once this bear flag was complete, we had the idea that a leading diagonal was in place, but then this move up went into the price territory of the leading diagonal, thus invalidating this notion. So then we have the alternate count, which is a 1-2-1-2 and a subwave 1-2 here. This means that we can expect, we already have a subwave 1, subwave 2, so will be followed by a subwave 3 to the downside. The subwave 3, if we take the extension of 1.61 of the Fibonacci extension, it gives us roughly a target of 1200. So if this count is a valid count, and the price moves according to this count, we are likely to see gold price breaking down strongly as it hits to the 1200 region as the immediate target. Thereafter, we are likely to see a series of 4s and 5s to complete the tail end of the 1s and 2s that we see here, with a final target of around 1150. Let's take a look at the weekly gold price chart to have a bigger view of what's happening. Here we have the bear flag ABC, zigzag correction, followed by the price breakdown here, and it is likely, if this count is correct, we are likely to see price heading down rapidly as it takes out this low at 1180 and hits lower to 1150. That is the current target that we have for this wave down. It could be lower than that depending on how strong this move down takes place. Now the alternate count, we must be prepared for alternate count in case the price turns up instead. The alternate count calls for a 1-2-1-2 setup to the upside. In order for this to be promoted as a primary count, we need to see a strong move, a follow-up of strong move from what we've seen here. So it could be that this is actually a wave 1 to the upside, wave 2 correction to the downside, and this need to be followed by a strong wave 3 to the upside. We think that that is quite unlikely at this point in time, but we need to keep this count as an alternate in case the prices indeed moves up. So in order to have a better confirmation of prices heading lower, I would like to see a few more price bars like this to the downside in the coming early next week. So we'll be looking out for that, and till then, bye for now.